Good morning, folks, and welcome to Morning Update. It is 4:07 in the a.m. Eastern Standard Time here. I have a seminar this morning, so I'm going to need to make this rather quick. So let's kick things off with Bitcoin. A big night overnight. We're up 4.2% overnight. A rock-solid move. We flashed it. This is a daily chart. Normally I go over 4-hour charts, but this is a daily chart. The reason why I'm bringing up this chart, and I'm going to go over this in greater detail with members tonight, is that we're seeing a massive bullish setup form here. What we're seeing is a left shoulder, a head, a right shoulder. Here is our neckline here at the 12,000 level. So we're going to be talking about early entry points on Bitcoin, because I think if we close above 12,000, we're heading up to 13,000 in the blink of an eye. Let's pull back to the 4-hour chart. Okay, so we're looking good here. We found a little bit of resistance above, no big deal. I think that Bitcoin is moving higher. All right, let's go to the currency market, the US dollar. Overnight, we had the Italian elections, which concluded. I have to be honest with you, I am not a big follower of Italian politics, so I don't know the parties that are politically correct to win or not so politically correct to win. The fact that the euro is up this morning implies to me that, you know what, since we are long of commodities and looking to buy commodities that rally when the dollar goes down, well, anything that makes the euro go up is good in my book. But the dollar overnight, here's where we opened up here. We closed off the lows. We had gapped down, but we rallied back. But we closed off the lows. I went to bed early, and we since rallied back overnight. And we even flashed a 90 handle before selling off. So that was an interesting event, because what you saw on the gold market was no reaction to that. Gold remained strong. It did not sell off after the dollar rallied up to a 90 handle. That's kind of a tell. I mean, this is only a 4-hour chart, but it's interesting. You want to take that bit of information, file it away. The fact that the price of gold did not sell off while the dollar rallied, and rallied pretty darn strong. But it has since given up those gains, and we are now down slightly. Now, take note of what's setting up here, the potential of what's setting up here. A head and shoulder setup, left shoulder, head, right shoulder forming. Here's our neckline here in blue. So if we break down below that level, in all probability, we're going to break back down into this trading channel, and that sets the stage for a continuation break lower this week. Let's check out the euro. Again, you had the Italian elections yesterday. You had Merkel, who was able to form a government. One would think that the euro would be stronger. It is not. However, we were lower on the morning. We have since rallied to recapture a lot of those losses. Let's go to a daily chart really quick. All right, so we're stuck here at a resistance level. Remember that it's jobs week here in the United States. We had the ADP report coming out midweek. We then on Friday have the government numbers, and they can certainly move markets one way or the other. The yen. Remember that Kuroda had implied that they were nearing the end of their QE program. So we have a continuation move higher this week. This is a daily chart. We broke out over last week's highs. At current, we're holding those gains. We are seeing some resistance above. Moving to the U.S. futures market. The NASDAQ futures down slightly at the margin. We had a really strong comeback on Friday. I went over our strategy with members on the week ahead commentary. I'm confident that we have a sound strategy going into this new trading week. We did put on some new long positions on Friday. As it stands right now, I am considering them short-term trades. until and if this market breaks out above recent highs. So this morning, the NASDAQ is slightly down, but fighting back. We were down lower, we are fighting back, as noted by these bottoming tails on these candlesticks. The 10-year note futures, very important stuff here. We have resistance above. We were trading higher. Sellers have moved back in. That means that while we're up on the morning, they're still trying to press yields higher. We discussed the direction of yields and the impact that it'll have on this market yesterday on the week ahead commentary. So members, if you haven't viewed it, please go check it out. It's a pretty lengthy one this week. So here is our resistance level this week. Now, if we break out above this level, that means that yields will be dropping. If we break down, that means that yields will be rising, because this is the note price, not the yield, but the price. So they trade inversely of each other. Let's go to the Dow Mini Futures. They're down about 47 points. We haven't yet retested prior lows yet. So we're not ready to go net short this market yet, because the market hasn't sent us a signal. 4-hour chart. We're fighting back here. Members, as I discussed over the weekend, let's take note of Friday's lows. That is an actionable price level if broken for our long positions, especially if we get a follow through. And more importantly, honestly, rather than the Dow, is a follow through to the downside, meaning a new daily low on the S&P 500. All right, so looking at the S&P futures, they are holding up much better than the Dow Jones, meaning the fact that they are not trying to recapture a support level, they are holding a support level. Let's go back and take a look. Here you have it. Dow resistance above relative to the S&P 500, which is holding support, and it appears poised to want to move higher, despite the fact we're down significantly on the morning by about just shy of about a third of a percentage point. So what we'll be looking for is a closing breakout above this resistance level. We're currently above it. The question then becomes, do we close above it or do we sell off? That is the $600,000 question. Let's leave off with a look at some commodities, crude prices. They had a rough week last week. We may be setting up for a head and shoulder. The setup here, left shoulder, head, right shoulder forming. We did put it in a new low here versus this prior low. The energy sector took it on the chin last week because of oil, but oil did not break down technically. So while oil in the early session here is looking promising, we are seeing some technical pressures on the price of oil. And if oil goes, you're going to want to avoid oil services. I mentioned last week agriculture. Let's take a look at oats. Oats are a little bit weak this morning. Not a little bit, a lot of it weak. Soybeans holding gains. We're struggling with support right now, but we're holding it. We're within a triangle formation, up slightly on the morning. Wheat, under pressure. I had a new member over the weekend concerned that he was late to the party for wheat, corn, etc. You're not. We're in early stages here of a bull run. But for this morning anyway, we're showing weakness. I would rather buy on strength than on pullbacks. Let's leave off with corn. Corn is holding in nicely, a nice orderly pullback. So this chart is looking good for a continuation move higher. So we are currently long already of the agriculture names in a basket. We'll be looking to add to that position. Now, I mentioned over the weekend on best stock charts and on the weekend commentary with members that we should expect a pullback in the ag names. They've had a nice run, and they've been outperforming the market. So this is the pause that refreshes. I think that we're moving higher in the coming days, especially if the dollar breaks. Let's get to member stock chart request. Okay, first chart up is going to be a weekly chart of Domino's Pizza. Domino's traded down with the market last week. We are within a trading range. We are holding the lower band of support. I like this chart. We did flash a topping tail the week prior. That means that we have resistance up at 236. If the market recovers, I believe that Domino's will be a leader breaking out of this trading channel. If the market rolls over, and this really applies to all the stocks that I'm about to go over, which are all longs. If I'm bullish on the charts, always remember that in the back of my mind, that if the markets roll over and break down to new weekly lows, all bets are off the table. And why is that? Why can't a stock show continued relative strength versus the S&P 500? The reason is, well, I'm not saying that it can't. I'm saying that the probability is very, very low. Why? It's because remember that we are sitting with an economy and a market with record high margin debt. A lot of people are on margin. So if the stock market rolls over, margin calls go out, you get forced liquidation, traders sell anything, and they have a tendency to sell their winners. What's Domino's? A winner. So even though it has all the reason to proceed higher, whether it be revenue growth, earnings growth, both, management effectiveness, it'll succumb to the selling pressure due to margin calls. So just be aware of it. Daily chart. All right, so we broke down twice last week below support, but we managed to close back above resistance. So now it's support again at 222.50. So a nice pullback here. We were leading into the third standard deviation Bollinger Band. I speak about this all the time. I even got made fun of one time about talking about the third standard deviation Bollinger Band as being a measure that should be watched. And of course it should, because for all intents and purposes, it's not supposed to be there, right? It's the third standard deviation Bollinger Band relative to its 20-period moving average. If you're above the 2 standard deviation in green, okay, you know, it could stay there for a little while. Third standard deviation, it ain't staying there very long. You're going to get a pullback. Volume last Thursday and Friday was very, very light. So just be careful. ELF Beauty, weekly chart. I spoke about this one several weeks ago, I believe here on a breakout, and we never did break out. Note the topping action. We broke down here. That was a breakout point failure. We rallied back. We have now broken down to a new low. So what does this mean? It means that the trend, the macro view, continues to be down, and it appears as though we are going lower. Now, one point I will make here is that this prior low was at 1820. Where did we close last week? 1820. So what I want to do is I want to throw a line up here. I wouldn't go shorting willy-nilly these shares, but on a new weekly low, especially if we break down below the all-time low of $17 per share, look out below. I would not be a buyer of these shares just yet. Just goes to show you how quickly you can go from being bullish on a chart to bearish. So I wouldn't go shorting until we break below a new weekly low. I would lean into that short on a break below $17 per share. Stokes are rolling over, RSI, lower highs, lower lows. Daily chart. All right, so it appears as though we may rally here. We're consolidating along the, in this case here, I have the 3 standard deviation Bollinger Band in green rather than red. We're consolidating. We may get a pop. Not a trade that I would make. Both lines on Stokes are trading down below 50. We know that rallies tend to fade. So just be careful. Me personally, I would get excited about getting long of the shares if we manage to close above 1885. Live Nation, we were bullish on these shares. We were long of these shares at one point in time. Wow, they've really fallen back down here. And it looks like they want to go lower. Why do I say that? Take note of your RSI. Lower highs and lower lows. Last week we put in a new all-time high, and then we reversed to close down with the market. So no longer is this a stock that is outperforming the S&P 500. It is now beginning to trade with it. Volume rose to the downside. Oh, head and shoulders set up on MACD, left shoulder, head with a double top, right shoulder, lower highs, breaking down on MACD daily chart. All right, so on a daily basis, really interesting. We broke down on Thursday really hard to retest the lower band of support. We made a new daily low on Friday, and we flashed a bullish key reversal. Would I buy it? No, not yet. We saw bullish key reversals across the spectrum on Friday. Was it short covering Friday, or was it earnest buying? We don't know yet, right? It's way too early. We need to see a continuation breakout on a weekly basis. This is a market that has taken a lot of damage, a lot of torpedoes below the waterline, technical damage. So watch for a continuation breakout in the close above $44 per share. I wouldn't even consider entertaining a buy until that occurs. Both lines on Stokes trading down below 50. Again, rallies tend to fade when you have both lines on Stokes trading down below 50. Volume was good on Friday. So it wasn't a short squeeze. It was a rally on volume. So that's promising. Lululemon, leaning into resistance. We've been talking about Lululemon for a while now. I don't see a reason to go buying these shares yet. We're very close to a breakout point. Volume was very light last week and the week prior. Daily chart, a bullish reversal day on Friday, and these shares want to go higher. But volume is not there. You need to have volume. What does volume imply? Institutional demand. All right, we may be contrarians, but we know that you want to follow the money flow. And right now, we're not seeing the money flow. We are seeing a bias to the upside. We are seeing a stock that is outperforming the S&P 500, all good stuff. But you need your rocket fuel. Who provides the rocket fuel? Institutions. That's it for this morning, folks. Everybody have a profitable trading day. Members, I will talk to you this evening on Market Wrap. Have a great trading day.